Welcome back to Smart Money. 10 crore corpus. That's what we're discussing today. And no, it's not unachievable. If you plan well, if you invest wisely, you can achieve that target. Mohit Gang of Moneyfront is here to tell us. But you know what, Mohit, before the break, we were discussing how someone of my age, perhaps if I start late, right? If I've just started my journey, to get that 10 crore corpus, I would need to invest at least 1 lakh a month for the next 20 years. That's what the graph had shown us. But you're telling me that there is another better way to do this. Tell
Absolutely. First of all, Sonia, it's blasphemous for you to say that I was starting late. So you're not allowed to say that.
Assuming.
But yeah. Okay. Look, if you have 30 years in hand, which means you are currently at an age of 30 or you're sub 30, that's when most of us start our earning journey. At 25 years, 27, 28 years, that's the time when people start earning. If you start right at the time when you start earning, and you park aside only 15,000 rupees a month, Sonia, right? And you give 30 years to your investments, you are fairly well set to achieve a 10 crore corpus. That's 500 rupees a day. If you were to break it down per day kind of an investment, it's 500 rupees a day. It's cost of a pizza today in a city like Mumbai, right? So if you can...
Not even that. Pizzas have become very expensive now.
Okay.
But wait, the trick is here, right? Yeah. This rate of return, 15%, where can I get that?
No, so even if we take a 12% return out there, right? So that's 1,000 rupee a day. Yeah. If you have 30 years in hand, and I'm not computing if you are increasing your SIP by 10% every year. And I'm assuming all of the investors will go through a cycle of increments, will go through a cycle of bonuses, so on and so forth. And they will very well keep increasing this amount. It will not remain static. So if you start with a lower amount also, let's say you can't start with a 30,000 rupee amount, you start with a 15,000 rupee amount, but keep increasing it. If you give that 10% increment, the number of years required reduces dramatically. So that's the whole thing. The whole trick is to start as early as possible. Start with your first paycheck. If you delay it, the process gets delayed and the end accumulation is always shorter.
Okay, I still want to talk about the 15% rate of return, right? It's not very ambitious if you think of it. What is the mix of investments that I need to make between mutual funds, NPS? A lot of people have EPF, but they also invest in PPF. Yeah. So what's a good mix to achieve that 15% target?
Look, honestly, I think equity is the only asset class which will kind of, or which can potentially deliver you that kind of a return, which is around anything upwards of 12%. Other than that, if you ask me whether PPF, NPS, EPF, any other small saving schemes or any other fixed income format will give you that kind of a return over a very long horizon, obviously not, right? That's more a different corpus and a different kitty. It's for your safety, for your smaller needs, for your regular needs, and for your immediate requirements. Let's say for a 3-year, 2-year kind of a goal. That is when you will park money in debt, right? So as much as required by your asset allocation, by your risk profile, keep that money aside. Keep doing your PFs and PPFs because obviously that's a good retirement corpus which will yield you great returns because you're not touching it for 30, 40 years. So that accumulates at a different rate. But equity is the only asset class which will perhaps yield you higher than 12% returns if everything goes well. And obviously India as an economy is doing great. We all know that story and everything. But if you see Nifty trend for since the time Nifty was born in this country, the returns have been around 14.5% CAGR annualized. I'm assuming if the same story continues for next 30, 40 years, you are fairly well set to achieve a rate which is higher than 12%.
Okay.
But to be very conservative, very, very safe, I would still request all investors to go with a 12% rate. Chances of you going wrong are fairly small out there.
Okay. We also have a very helpful table that Mohit has put out about the different scenarios for different age groups, right? So I'm going to just request my director to pull that up for us. If you're in your 20s, if you're in your 30s, if you're in your 40s, right? There are different ways that you can plan this. So you want to take us through that?
Yeah, sure.
Okay, here you go. How to make a 10 crore corpus depending on what your age is. Now, if you're 30 years old, this is the investment that you need, and you've assumed 15% returns here, right?
Absolutely. We've assumed a 15% return out here. If you have 30, which means you have around 30 years to go, you have 40, you have another 20 years to go. These numbers could be rounded off to the nearest possible, right? So I think around 17,000 to 18,000 is what you need to park every month aside in terms of achieving that 10 crore kind of a corpus. All I want to show Sonia out here is that 10 crores looks a very daunting and a big number, but if you break it down month by month, brick by brick, it's not a big number. It's not a big number, absolutely not big for someone who is in the age bracket of 30 to 35 years. Anyone lesser than that age bracket, it's an absolutely doable number. If you are above 35 and you have missed the bus of investing till date, then perhaps the amounts might be a little higher, might be a little bigger, but you can always start by increasing it year on year and make it still simpler. So that's the only thing which I want to kind of say.
Okay, there's another question I have here. For a lot of people in this 30 to 40 age group, they plan to buy a house, right? For whether their own consumption, a second home, whatever. A lot of people live on rent as well. How do you adjust that? What's the best way to do it? Should you should you buy a house in the early stage of your life and then pay off the EMI, or do you live on rent and hold off your home purchase? What's the best way to keep in mind your 10 crore corpus target?
Look, to be very honest, buying versus renting will warrant one full episode. It's a fairly complex equation, and to solve it mathematically, I'll always lose the battle against the people who want to rent it out. Mathematically and financially, you can't argue for a case because the rental yields are hardly 2.5% in a city like Mumbai, and pan-India, it's hardly around in that same band of around 2.5 to 3.5 odd percent. So it doesn't make sense. So buying doesn't make sense financially, but with the peace of mind, one particular residential piece gives you the comfort of not changing it every 11 months and not scouting for a new place, so on and so forth, right? I think you should have that one residential home, but if you're planning to take one, you have to provision for it completely separately. So just keep aside your retirement corpus. This is your wealth created for your retirement life, for a happy, prosperous life, post your working life. House is within your working life, for which you have to provision separately, whether it is 5 years away, 10 years away, plan out, charter out that goal, figure out what is the corpus required, 1 crore, 2 crore, whatever could be the corpus. Work it out mathematically. It's not too tough. Honestly, a 1 crore corpus in 10 years is not a great amount. If you build it brick by brick through SIP route.
Sure.
You just have to plan for it.
So since you said SIPs, how can one make their SIP simpler?
Okay, look, so I go with very simple formulas on this one. If you're not the ones who are tracking markets in and out or tracking the performances of the funds and just trying and chasing the fund manager who's delivering you the highest alpha, so on and so forth, to make it very simple and to cut the cookie completely and to make it for a 30-year kind of a portfolio, just invest in index funds and sleep very peacefully. You can forget about it, right? You buying Nifty, and Nifty is automatically adjusting itself with the best companies of this country. You don't have to bother about it. Don't have to really chase 1% higher return or 0.5% higher return, for which there is no surety, right? I would have still chased it had there been a permanent surety that yes, I will beat Nifty consistently quarter on quarter for next 10, 20 years. But if there's no surety, I would rather buy the index and keep it very simple.
Okay, we have one question coming in from our viewers. I just want to take this with you. What should the ideal ratio be if we want to invest in NPS and mutual funds through the SIP route?
Look, NPS is still a safer bet, right? NPS though is for your retirement. But in NPS, you have those life cycle stages. You can buy an aggressive fund or a moderate fund or a conservative fund, and the management is not the management of the NPS per se is a slightly more conservative management than a mutual fund. I would still assume that a mutual fund will give higher returns over a longish time tenor if you hold it for 20, 30 years. So my sense is keep your NPS limited to whatever your tax advantages are, right? And then put the remaining amount through mutual funds.
Okay, guys, we're going to wrap up now, but I just want to get those charts up for you back on your screen, since in case any of you missed it, it is not unachievable to get to that 10 crore target. If you plan well, you can do it. So just request our director to once again pull up those charts and revise them before we sort of end the show. There you have it. This is, of course, a 1 crore corpus, which I think now that we're talking about 10 crores, 1 crore seems like a much smaller amount. Okay, you want to just take us through this?
Yeah, look, so the numbers are all there for people to look at it, but I would just try and put some don'ts around it in terms of what people should avoid doing. One should avoid redeeming and churning too often, right? If you hold it through the highs and lows of the market, that's when you will make the most of it. For last 40 years of market history, Sonia, every year markets have seen a correction of more than 10%, every single year, right? So if you can't hold within those corrections, you will never make this amount. So people have to hold through corrections. Don't try and churn too much. Stick to your asset allocation. Try and see if you have low yielding assets in your portfolio, which is if you have too much of FDs, if you have too much of real estate, if you have too much of gold. Look, these are great safe assets. These are assets to fight inflation. These are not assets to create wealth or retirement corpuses. So try and limit those assets within your portfolio, but try and go more for equity in your portfolio. Again, depending on the risk profile. So increase that allocation. be very, very systematic and try and increase that amount gradually.
I think the number for me, the magic number is this, right? 50,000. Because for all the people in my age group between 35 to 40, if you invest 50,000 per month with a SIP increasing 10% annually in 20 years, you can achieve your 10 crore corpus.
Totally doable. Look, I think 20 to 25 years is the goal which one should give to himself or herself, that I want to accumulate 10 crores within 20 to 25 years. That's a fairly doable thing. If you have the provisions and means to increase that amount, you will do it much faster. If you're more disciplined, you will even do faster, right? So it's a combination of being disciplined and having the provisions of increasing the amount.
All right, we've run out of time, but this was really an engaging discussion. Mohit, thank you so much for joining
My
us
pleasure.
and helping us plan our financials. Financial freedom is everything, right? It's a superpower, as we say, and we're here to facilitate that for our viewers. With that, it is curtains down on another special edition of Smart Money. Thanks for watching.